Hey everyone, me Kevin here. The president of the Dallas Federal Reserve just had some not so great things to say about the markets. He said, quote, "We are now at a point where I'm observing excesses and imbalances in financial markets," suggesting specifically that we have historically elevated stock prices, tight credit spreads, and surging home prices. This was during a virtual appearance at a Montgomery Area Chamber of Commerce event. Now, this is an issue because the more you start having the Federal Reserve going, maybe it is time for us to start tapering sooner than we expected, the more pressure grows on Chairman of the Federal Reserve, Jerome Powell, to actually do just that. Now, Jerome Powell just the other day suggested, hey, don't worry. This was Wednesday. Don't worry. We're going to hold through all this inflation. All the inflation that's happening is just because of the way we do our math, year-over-year math, and anything else, don't worry. It's just temporary. It's because of supply chain issues. There's no real inflation. Don't mind that we just printed a whole lot of money. We don't think there's going to be inflation. Now, I'm partially inclined to believe that inflation will go down in the longer run, starting hopefully in September through October. So I still am consistent with my beliefs. But the way this sort of incongruence between folks at the Fed is starting to sound like maybe discussions at the Fed aren't as unanimous as we might think they are. In fact, President Kaplan goes on to say, quote, "I do think at the earliest opportunity, it would be appropriate for us to start talking about adjusting those $120 billion in monthly bond purchases, as well as, obviously, low interest rates." So Kaplan is something to know. He's not a voting member of the FOMC, the Federal Open Market Committee. That's the committee that actually votes on whether or not we are going to raise rates. However, he is a president of the Dallas Fed. And this right here is Topo Chico. It's pretty delicious. Not sponsored. I wish I was. But anyway, that's a problem. Because just Wednesday, you had Jerome Powell say it's way too soon to even talk about talking about. Well, good thing Kaplan isn't part of your FOMC meetings. Kind of makes you wonder, why is Kaplan not part of your FOMC meetings? But maybe that's too jaded. Anyway, kind of makes you wonder, if he's not part of the meetings, then if he were, we'd probably already be talking about tapering because he would be there talking about it. It's kind of interesting. And it's very opposite of what Jerome Powell said on a Wednesday. And Kaplan went on, and according to Reuters here, he went on to reiterate his expectation that the Fed will need to start raising rates next year, that's 2020, more than a year earlier than most of his Fed colleagues anticipate. Yeah, and if we look at the dot plot of what the Fed colleagues are saying in terms of when we might see interest rates go up, most of them see interest rates ticking up in 2023 with a longer run interest rate level somewhere between 2 and 2.5% at 2024 and beyond. Now, Kaplan was asked, well, wait a minute. I mean, Jerome Powell says we have to hit substantial further progress. And he says, look, the thing is, that substantial further progress might come way earlier than we even thought a few months ago. And he believes there is risk that unemployment will fall to 4% by the year end. Now, that sounds odd because I just said risk that unemployment will basically be really low. That's obviously a very good thing. So what he means is there's upside risk. In other words, it's good if unemployment goes really, really low because it means the economy is doing so dang well, but it does mean there is a risk of us raising rates sooner than expected, which, quite frankly, is something that many people on Wall Street have been believing and preparing for. This is why we're seeing so many shorts in the market right now, so many hedgies taking profits and spending less money on some of our favorite names. It's unfortunate, but basically anything you've bought since January that has a high earnings multiple or is a growth or SPAC company has kind of been getting spanked. Now, next Wednesday, we will be getting unemployment data, so all eyes will be on that unemployment data release. Of course, I'll be live streaming the release as soon as it happens at 5:30 in the morning. But when asked about inflation, Kaplan did say that he expects inflation to be very high in the next few months, specifically because of base effects. But he also said that a lot of the pop of this inflation could go away in the fourth quarter, which would be October, November, December. But he doesn't go as far as saying that all of the inflation we're seeing right now is transitory. And he believes that there are longer lasting strains of inflation. And it's not just supply shortages, but it's also because you already have material prices that are higher and potential labor shortages on top of all of the consumer spending and government spending that's going on. So let's say for a moment, you get rid of the base effects, which those will be gone in about 3 months. We don't have to worry about even hearing base effects anymore. That'll be gone. Comparing to the bad of 2020 will be gone. Then supply chain issues, those will resolve themselves. But it's entirely possible, and this is an argument that's being made on Wall Street now, that what if we get to unemployment levels at 4% so freaking fast that all of a sudden companies are like, oh crap, we all of a sudden thought there weren't enough workers, all the unemployment benefits expired, everybody got back to work, but wait a minute, we still need a whole lot more people, we still can't keep up. Well, that could be a cause or a reason for potentially even longer lasting and larger inflation. So this is a little bit of a very, I would say this is, let's just call it what it is. It's a contrarian argument at the Fed. It echoes what a lot of us see and believe in the markets. And yeah, it is nice to hear him say that, look, we're going to see inflation taper down towards the end of the year. September, October has been my opinion. His is the fourth quarter. That's great. I'm excited for that. I'm curious to see what'll happen with cryptocurrencies at the time. I'm also interested to see what'll happen with growth stocks at the time. But at what level will they fall to? And that's still the big mystery. Now, Kaplan, given that he's talking about wanting to raise rates sooner than everybody else and taper sooner than everybody else, it seems like he's starting to get a little bit more nervous that we might end up with a little bit more lasting inflation than everyone is expecting. Let me know what you think in the comments down below, but this is a bombshell from just today. Treasury yields on the 10-year are up, cryptocurrencies are up, and folks, buckle up. Like I said, next 6 months are gonna be one heck of a ride. Thanks so much for watching. If you enjoyed this content and perspective, consider checking out the programs down below. Use that coupon code expiring May 5th for the programs on building your wealth. And folks, we'll see you in the next video. Bye.